Hello, Maverick traders. Welcome out to your market roundup, September 18th. Corey here with you. Fun to be with you. Let's get to it. So we always go through a top-down approach, talk about what's moving in the markets, how commodities are doing, which is really a story right now. The oil markets, we'll touch on that. We look at sectors, we look at where money is flowing, and then we always try to figure out what's the best opportunity, bullish, sideways, and bearish, and we have something of all of the above for trade ideas today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so kind of an interesting day here in the markets. Quiet on most markets. Dow, S&P, NASDAQ all flat. Russell 2000 has been underperforming all year. That's the small caps, and it was down about 0.6%. Oil up another percent. Gold also strengthening. I highlighted in the trading room over the weekend some gold ideas, and I think that's still an area of focus that I'm transitioning to thinking that precious metals could go on a nice run higher. So I think you got to look at gold mining stocks, gold, silver, those types of names as specifically precious metals, not necessarily all materials to the upside. Oil up another 1%, and the SPR is drained. So the Strategic Petroleum Reserve, they really did a good job. They sold that down. Then oil prices really went sharply lower. They never filled it back up. Now, maybe they're just going to be done with that altogether. Perhaps that's the goal. But if not, they're going to end up buying at higher prices than where they sold. And they had every opportunity to turn that into a good taxpayer trade. So they've taken what was a very good trade. Now they're running the risk of having it turn very bad. Striking unions, you've got the United Auto Workers, you've got writer strikes. Right now, it's not a huge economic problem, but if the UAW strikes and you have shutdowns of GM and Ford and all their production and employment situation can really take a turn. So right now, not a major economic issue, but could be that in the future. Advanced decline line, we had about 0.6 of all stocks going down today, slightly negative, and then still the 50 MA is more bearish than bullish. 70% of stocks below the 50 MA tells you that we're still leaning a little bit more bearish, even though the market's been in this choppy sideways pattern. So as we look at the S&P, you're in a symmetrical triangle. And what is a symmetrical triangle? Well, you have lower highs and you have higher lows. You're really spinning your wheels and going nowhere. This is a dangerous price pattern for trend traders, and we've tried to do a good job. I've emphasized this in the trading room. Look, we've got mixed signals. Now is not a time to play for a trend. The risk is that you start to get really bullish here because the market breaks above the moving averages. The problem is that we set a lower high soon thereafter and then plunge. And then you plunge down below and you think, well, I better get bearish on the markets, and then we rebound back above, and you think, well, I better get bullish, and then we go back below, and now you think, well, I better get bearish, and then we go back. And that's the spinning, and that could really have you in this dishwasher of sorts where you're just getting churned, chewed up, and spit out, and it's just not a good place to be. So I think we've done a good job. I've done the trading room, the weekend trading room, the last 3 weeks as Rob's been traveling, and I've really emphasized this point. Look, it's all mixed. 20s below 50, which is more bearish. Price has been mostly above, which is bullish. But here's the kicker. The moving averages are all sloping sideways. That just shows there's just indecision. There's no trend here. When you're in a trend, there is positive or negative slope. Right now, it is just completely flat. We are trendless. NASDAQ, same thing. It's the same dynamic. Now, there will be a breakout at some point. Once you have the big break, well, that would be a turning point. If I had to guess as to which way it goes, I'm leaning on the bearish side. I think that that's the path of least resistance. As we looked at the data, 70% of stocks are below their 50 MA. We are in more of a bearish market than bullish, slightly, but it's really a sideways market. We don't have that resolution just yet. Today, there wasn't a whole lot going on. Tesla was down sharply, down 3%. Oil, energy stocks continue to outperform and just be a safe haven area. Apple up on some news, up about 1.7%. But I mean, this is just a heat map where there's just some green and some red, and again, it was a sideways market. So a couple of stocks here and there, but otherwise just kind of a sideways chop. So for this week, we went to a little bit more bearish outlook. We went to 0 on the monthly, but -1 on the weekly. So just a tick here. I think Friday's reversal on some volume. It was mostly options expiration, and when you have triple witching, quadruple witching, when there's multiple expirations and such, you can have an uptick in volume. So I don't put too much behind that, but I think that is a little bit of a kicker. And like we said, the data has been a little bit more bearish than anything else. All right, so as we look at new trade ideas, I'm going to highlight the precious metal space with some names, and you could add a few more. I mean, just brainstorm on precious metals and look at some of those charts. Now, they're bearish to bullish reversals is the idea. XLE, the energy sector, I think it's in a little bit of a risk of going choppy for a couple of weeks. And then on the bearish side, just a mixed bag. Nothing theme related, just a few different names that have bearish price patterns. So on the bullish list, Berkshire Hathaway, which has been a personal favorite of mine, recent breakout, high basing still, just looks like the path of least resistance continues to be to the upside, outperforming the S&P 500 for some time. And if you look at a longer term chart, really has started to break above prior highs that have been resistance for a long time. So Berkshire could really move. Now, it's a huge corporation, big conglomerate, tends to move a little bit lower beta, lower volatility overall, but could really increase in price here in the short term. Here's a silver mining company, Pan American Silver. You can see the bearish to bullish types of reversals, how they've bottomed out, kind of created that cupping formation. And here it just looks like we might be on the cusp of a breakout. Notice the recent upticks in volume, the characteristics of something that likely trades higher. On the neutral side, as I said, I've been a huge fan of energy. I would still give it the benefit of the doubt, meaning I wouldn't be bearish by any means, but I do think we're in a little bit of a consolidative phase. This was a little sign of exhaustion, and we've basically gone sideways since. I think we probably stay relatively sideways for a couple more weeks, consolidate some recent gains, and then by all means, probably another big break to the upside after a small corrective consolidative phase. On the bearish side, a few names stand out. Here's Alcoa, down at the recent lows, descending triangle. Looks like we may want to break those lows and continue on this downward trajectory. Nice downward sloping moving averages and such. Coinbase, another that I like on the bearish side. Here you have a bullish to bearish reversal. So you were in a strong upward move, big exhaustion set in. Now you've consolidated underneath this, but this is a bear flag pattern where basically you have the plunge and then the consolidative move, and the next move is typically a big sharp break of that minor uptrend line. So just draw your little uptrend line here under these lows, and when we break that, the floodgates should open up. It should really be moving 100 miles per hour to the downside. Lowe's company, here you had a big break on volume. This one I think you could play as almost a little mini inverse cup and handle, where first I'd expect a small bounce and then another move lower. So if you are doing some math behind this, 234 is the top of the cup. The bottom of the cup is about this level. We'll call it 217. It's not an exact science. It's just a rough kind of estimate that the cup is 17 points in size. The handle is usually 30% of the size of the cup, which would be about 5.1 or $5. From 217, a bounce up of $5 would put you at 222, which is the level I would be looking at. So just a minor bear rally up near 222 is where I've got this thing laser focused for an entry point and playing it to the downside. So 222 is mathematically about right where I'd want to get short, get bearish, and play for that next plunge. And it should be a relatively quick and easy move down to 212. So looking at it from the standpoint of risk, reward, opportunity, and such, that gives you a nice 10-point move in a relatively short period of time if you can enter around 222 and then see that resolution that I'm expecting. Markets are in this consolidative mode. Odds are favoring a break down out of the symmetrical triangle. We've got the Fed meeting on Wednesday. Now, while the Fed is not going to raise rates this week, the guidance they give, and I think they're going to be very vigilant in saying we are not done raising rates. We are considering all options. We are still considering that as we speak. AutoZone, Darden Restaurants, FedEx, General Mills, KB Homes, just a few kind of trickling through. FedEx I would highlight because we've had a bearish trade on UPS. We highlighted a bearish trade in FedEx over this past weekend trading room, but whenever you have earnings, that is something to be aware of and can certainly throw any trade into a beautiful thing, or it can be boom or bust, right? It can go against you. So some ideas there that are going into earnings. Hope you enjoyed this market roundup. Have a great week, everyone. We'll see you next time.